Hi and welcome everyone. In this video I will share my comprehensive analysis of the Disney company and its shares. Disney is a name that does not need introduction. It is a great company with incredible brand awareness across the globe. It has amazing media intellectual properties and amusement parks. But why is its stock down by almost 33% in the last 1 year? We have to start our analysis by comparing Disney stock to similar companies. But who is a similar company? Is it Netflix, Warner Music Group, Live Nation Entertainment, Comcast, who owns Universal Studios? According to the most recent company report, Disney Media made 63% of the total revenue for Q1 23 and Disney Parks accounted for the remaining 37%. When looking at the operational results, however, one can see that Disney Parks accounts for 100% of the operating income, with Disney Media even being on loss, which was due to the Disney Plus mainly. We can break Disney Media into further down to see the whole revenue picture. Disney Parks 37%, Linear Networks 30%, Disney Plus and similar products like the sports content ESPN account for 22%, content sales 19%. The biggest struggle for Disney is the subscriber number being flat on Disney Plus or no subscriber growth, $1 billion loss in Disney Plus, alarming decline in free cash flow. So now that we know the segments in Disney company, let us have a look at the similar companies. Netflix is down almost 20% in the past 1 year. Similarly, Comcast is down 21%. The Warner Music Group is down 20%. At the beginning of February, Disney CEO announced a planned 7,000 job cuts, which is about 3% of the total workforce. And the markets reacted positively to the news, as this is expected to drive the cost lower. However, I think focusing just on the cost-cutting side could hurt Disney Plus even further. This is best described by New York Times' James Stewart.
Cut this spending without losing subscribers. And I still think, analysts, everybody in the street, investors believe streaming is ultimately a scale game. You have to be big. You have to spread those costs over a very large number of subscribers. And if you start cutting spending too much, I don't care how much you realign the creative teams, you can't just produce hits, and you're going to have trouble with those subscriber numbers. Cost cutting has never been a long-term growth strategy for anybody in my experience.
But perhaps what made investors excited was the news during the earnings call that Disney plans to start paying dividends out someday in 2023. Iger mentioned that a modest dividend would return in 2023 with plans to increase the dividend as cash flow settles. I'd expect the dividend to be very small anyway, somewhere around 80 cents per share or 1% yield. There are many investors buying this stock for sentiment. I know dozens of people having Disney in their kids' portfolios, including myself. I think the company isn't going anywhere, but in my opinion, it isn't the same company as when I was growing up and don't have confidence in their products today. A lot of it are things that aren't appropriate, political or too woke. When talking about politics, this is the biggest headwind for Disney in my opinion. Disney has faced mounting criticism for not taking a stand on Florida's Don't Say Gay bill, which would ban educators from discussing about sexual orientation and gender identity in classrooms. The bill, officially known as the Parental Rights in Education Bill, is expected to become law in Florida and is supported by Governor Ron DeSantis. One of the ways the company can make lasting change, former CEO Chapek said, is through Disney's content, citing releases like Encanto and Modern Family. Chapek also addressed Disney's political contributions in Florida. He said the company has donated to both Republicans and Democrats and that its new Chief Corporate Affairs Officer will be reassessing its political giving. Disney's current and former CEO Bob Iger, who stepped down in 2020 and then back in November 2022, tweeted in support of President Joe Biden's call against the bill in February 2022. A year ago, Disney was one of the first major movie studios to say it was pausing the release of its films in Russia as the country's invasion in Ukraine escalates. Do you think the subscriber loss in Disney Plus is because of a price increase or because of woke content that doesn't align with mainstream family values? Let me know in the comments below. Second headwind is the free cash flow and profitability. In the last few years, Disney has become a merger and acquisition company. It overpaid for some acquisitions, especially 21st century. Payouts blame the Fox deal for most of Disney's woes, including long-term debt of $45 billion. Other long-term borrowings stand above $12 billion, with $3.2 billion in current payments due on that debt. Cash, though, has dropped from $11.6 billion to $8.5 billion, and Disney wants to throw the dividend back into the mix, even as its free cash flow dwindles. Disney is not going bankrupt, but it's not exactly agile either. Take a look at their revenue and operating margin in the last 15 years. It has come down from the stable 18-20% to just 7% in the past 2 years. Is the current management able to get back to the golden times? This is the question. I have all streaming companies on a too hard pile. They'll need to raise prices and services much higher to offset their depreciation of past content. Netflix has negative cash flow, and if Disney Plus is carrying their revenue, I'm sure there's some correlation. With all that said, I think Disney is a great company to own for the long term, but story needs to become the focus of their content again. Disney should stop destroying old characters and start again creating new good ones. They should stop destroying their moat, as a lot of parents aren't comfortable with their agenda today which they are publishing. Most analysts are very positive about Disney. According to Zacks, earnings per share will more than double in the next 1 year. I think Disney was definitely a buy when it was $84 in October 2022. I think the current price is too high. If it drops below $90, I will buy some shares. Disney is a great company that many are incredibly optimistic about, and while I'm not a big shareholder, I do feel it is an exceptional company. Do you own Disney, and what do you think about the company? Let me know in the comments below.